네, 월가 트레이더 버니의 미국 주식 시간입니다. 지난주에 이어서 오늘도 최근 미국 시장을 월가 트레이더는 어떤 시각으로 좀 바라보고 있는지에 대한 이야기를 전달해 드린다고 하는데요. 확실히 월가 스트리트에서 또 이야기를 해주시는 내용을 바탕으로 특히 이 미국 시장에 투자를 하는 서학 개미분들에게 도움이 될 내용이라고 생각을 합니다. 자, 지난주에 이어서 미국 시장에 대한 동향 바로 이야기 들어보시죠.
And we talk about analyst expectations. We also talk about companies telling you what they think going forward, and that's what's called guidance. So a company gets into their quarterly report, or they have a meeting with analysts, or they publish something like through the press, and they are able to say, we believe that we're going to have great growth next year, and earnings are going to grow, and we're seeing a lot of new customers coming on board. Or they say, we think things are going to slow down a little bit. So Peloton, an exercise bike manufacturer, said in January that they experienced a substantial amount of slowdown in the fourth quarter, and they anticipate that slowdown to go through most of this year. Well, the market just hit that stock like you can't believe because that's negative guidance. So we identify periods where we go through positive and negative guidance, where the companies say things are great and they're even going to get better, or things were bad but now they're going to get better, and those are all positive guidances. Negative guidances are things are good but they're not going to stay that good. They're going to slow down a little bit, like Bill.com did earlier this year in Upstart, or they can say things are not good and they're going to get bad. So we look at our recessions. These are the gray vertical bars, right? Okay, and we see there was a lot of negative guidance in late 1999, 2000, and that's because the dot-com bubble, all those stocks basically fell off the table and really went down, and so many companies never came back in that whole dot-com area, and they provided all that negative guidance. We got into a recession, and then we stay positive. Generally speaking, we get negative guidance again in 2008, 2009. We see the recession after 2009, and then we get positive. And we've had, here's COVID right there, that little tiny dip. And then the next thing you know, they missed on everything, and the companies kept saying, hey, things are much better than you think they are. Things are much better. And what happened was the stock market kept on going. Now, into this year, they're saying things are really slowing down. We're not seeing the same kind of pickup what we're seeing. And we could see that in the internals. We could see that in the advanced decline line. We could see that in the number of new highs relative to new lows. What we now want to see is that line go back positive again. And that's just going to take a little bit of time. But we constantly want to keep on this and constantly want to keep looking at this. Let's go to the next chart. So, and here's another interesting thing. So if we look at just technology, because technology is so interesting and it has generated such great returns for the stock market as a whole, and one of the reasons why NASDAQ always outperforms on the upside the S&P 500 is that technology stocks are the great growth drivers. Okay? Now we want to look at the people inside the company. What company insiders are doing. Are they buying their stock or are they selling their stock? So you can see periods right here, okay, of the market in general, and we can look at the insider buying, okay, where they're not buying, where they are buying substantial amounts, and you can see how much they bought through this whole rally, basically from the beginning of 2021, and they're still buying. So there's enough company insiders buying their own stock for themselves, not stock buybacks, but buying it for their own accounts, that's reflecting positively about those stocks in general and the industry as a whole, the technology industry as a whole. The two biggest sectors of the market that drive returns more than anything else is consumer discretionary and technology. Now, Those are also the two most volatile, and those are also the two that go down the most. But what are you seeing now? You're seeing those stocks go down a lot. You're seeing shrewd people like Bill Ackman come in to buy $1 billion worth of Netflix. And you're seeing more and more buying by company insiders of technology stocks. They're buying their own stock for themselves. So in this course of this setback, they're using these prices to be able to add more and more because they realize that this is still an industry that's growing like crazy and going to continue to grow and outpace expectations, and that they're able to get prices for their own stocks that they really like. So now we've looked at analysts' expectations, and we've looked at consumer buying, insider buying, and we've also looked at how attractive the prices are. Now, what we also want to do is tie in a little bit of sentiment to that. So we can see on this chart, this is the 4-week moving average of the number of people that are bearish in the stock market, okay? And this line is hanging right around 42%. So we get up to about 42%, and the stock market is at a bottom. We get up to about 47%, and the stock market's at a bottom. And this is over a 8-year window. We get up here in 2020 in COVID, and that stock market's at a bottom. And we're back up here again. So when we got down here, well, we had very few people bearish. Very few people bearish. We had setbacks. Here we had very few people bearish, but it doesn't work as well with few people bearish because don't forget, there's this upside bias to the market. But when we see there's a predominant amount of people bearish, okay, that's a positive sign because that means that we're all focused today on the things that are bad for us today and bad for the stock market, i.e. this consumer price inflation, the consumer price index inflation that we see, the concerns whether Russia's going to invade or not invade Ukraine. All those things right now are basically giving us a complete negative view of the market because we think that the Fed's going to have to raise interest rates and all that. Well, the stock market's actually 6 months ahead, thinking about 6 months ahead. So if you focus too much today and you get too bearish today on current conditions, you're giving up the opportunity to buy attractive prices. So we've got to combine all those things and put all those things together to be able to identify interesting opportunities to be able to accumulate stock. Let's look at the next chart. Okay, so this is a really interesting chart. This takes us back 10 years also. And what this is Goldman's equity book. So all their equity book and what their customers are all doing, okay? And are they covering shorts or are they short selling? Okay, because they're doing all this on margin, okay? And what they can see is the number of times they're covering shorts are probably more near times when the market's going up and they're covering shorts. When they're short selling, those are times when the market's going down and they're short selling. Well, here's the 3 biggest spots on the chart over the last 10 years where they're short selling. And what we can see is COVID was here. Okay, this was a technology sell-off in April and May of last year that the market recovered from. And we are back to a peak level down here of customers selling short. Well, they're never right? They're on, I mean, you can look at this over time. When everybody goes one way, it's obviously ex post facto probably a good reason to buy because everybody's always bullish at the highs and bearish at the lows, and that's what makes highs and lows. So that's one of the reasons why I thought that the end of January was a great place to have a market bounce from. I still think we have to work through all this, but I look for opportunities like that to be able to set the lows, and then we can work away from them in the second half of this year.
네, 이렇게 월가 트레이더 버니 씨의 이야기까지 듣고 왔습니다. 여러분들을 위해서 노란톡 열어두고 있고요. 서울경제TV 다시 보기 서비스 통해서 해당 내용은 다시 한번 체크해 볼 수 있으니까 궁금하신 분들은 적극적으로 이용해 보시길 바랍니다.